All right, buddy. So Michael Kramer's with us right now, and Michael's work is top drawer. Welcome back, Michael.
Hi, how are you? I'm trying
Good,
to turn
Mike.
my camera.
Good, Mike. So I went to your Twitter stream here. Look at you're on the ocean now, but I went to the Twitter stream and I saw that you had where was that? Your pinned tweet
Oh, my investment
was
ladder?
yeah, was very good. So you could find Michael's writing on Seeking Alpha.
Yes.
And Mike, we since we last talked, he showed up for a week, but someone knocked his glasses off, and I'm wondering when you think he's going to come back.
Wait. Say that part again. Who knocked off whose glasses?
Oh, the bear. You're sharing your. You see
Yeah.
the bear, or
Yeah.
I'm not
It,
showing.
yeah. Oh, yeah. That showed me. That was supposed to be an image of me, like, thinking really hard with smoke coming out of my head.
Okay.
As I was, trying to put together that quarterly letter, which it's funny because writing these quarterly letters uh, they seem to get harder and harder to do sometimes because you're trying to explain to people, what you're trying to think about in terms of what you're doing and how you're managing, the risk around the markets and everything. And it's a tough thing to do sometimes.
What did you think when you saw 60 reading on VIX that day?
I woke up, I was actually in Aruba on my summer vacation. Well, one of my trips that my kids had me going on all summer. And I woke up and my immediate reaction when I saw that was like, oh shit. And it wasn't like an oh shit, like, the world's gonna melt down. I'm like, oh shit, they're gonna come in and just sell the shit out of this thing now, and the market's just gonna rip by the end of the day.
Yeah, yeah. Well,
Like,
what's
why do they have to
interesting,
do it like this?
well, I think it was a little dysfunctional. I don't think people were getting trades off when the
No,
VIX was
I mean,
going up
first of
that
all,
much.
I mean, this is happening pre-market. So who the hell is looking at the VIX and really seriously, trying to find liquidity at 8:30 in the morning or 8 in the morning, right?
Well, it
And
should have forced a lot of the short volatility players into being forced to cover. And there are many ETFs that implement selling vol strategies,
of
and
course,
they
then it happened at the worst possible time.
I don't think they took a hit because they didn't make a market. There were no markets made in VIX when that
Well,
was
because
going on.
again, like it's the VIX is, I mean, the VIX is an index, right? And it's derived off the S&P 500, options and futures. And there's no volume at that time of the day in those types of instruments, right? So if you're, in VIX futures or your VIX options and you're trying to trade out of them or trying to, I mean, what is your benchmark doing and how are you really getting accurate pricing? And so it just seemed like a perfect storm because, not only going into that job report, you had all those big corporate earnings that came out the days
Yeah,
before.
right.
And you also had the volatility dispersion trade unwinding at the same exact time, which is basically go long vol on the underlying equities within the S&P 500, the top names, and go long the stock, and then hedge that with being short S&P 500 implied volatility. And so once you had Apple and all those companies report results, that implied volatility dispersion trade just unwound.
It
And so
was
on top,
historical. I've never seen this before. Have you? It's a
no,
once
not
in a
not in this
lifetime.
manner, not in this manner. So I think it was just a perfect storm of, this people getting trapped in the wrong side of the trade, and I think it just, again, you had Japan down 12% that night, you had
Yeah.
Kospi down 8 or 9% that night, and the kind of thing that I thought was weird when I looked back on that day was that Europe wasn't really down very significantly. And that kind of was another warning to me that, hey, this isn't like the end of the world going on here. This is just something weird happening. And this is actually going to probably be somewhat bullish over the very short term because you knew that the VIX shouldn't really probably be at a 60
No,
hand.
the magnitude of the S&P correction of 10% did not justify a 60 VIX. That was
No.
positioning, wrong-footedness,
Yes.
because those guys have been making money for years now, selling every VIX rally to 20. Okay,
Right,
so
right.
they've been picking up quarters off the sidewalk for years, and the steamroller came, but they didn't get run over because there was no market made.
Right. And
I
so
mean, they were so wrong, and they didn't take a loss, and the people that were so right didn't make money on that.
no, because again, like I think it was just,
I was one of them, Mike. That's
who
why I keep talking about it.
yeah, I
Anyway,
mean, like, but honestly, look at the
let's.
time of the day it was. Most of that move was
All
pre-market,
right.
right?
Yeah, but you should have,
And so to me,
been
that
able to
sort
get
of,
out at 30. You couldn't even get out at 30.
well, how are you going to get out? There's no market, right? There's no
That's
top
what
of
I
book,
mean.
right? There's no depth.
No, I mean once the market opened. So I
Yeah.
mean they still weren't making markets.
No, because yeah, well, it was because of the dislocation.
Unbelievable to me. It's just another war story. So all right, so uh do all-time highs look like a layup to you here, Mike?
Uh, it depends on
All
what index you're talking about.
right, S&Ps.
I mean, the Dow obviously is already
It
there.
did it. Yeah, it's
Uh,
diverging up here at new
the
highs.
S&P, I think the S&P is a bit of a push
Yeah,
because it's really close and it can do it. It just
yeah.
needs like, like a crazy, $6 billion buy imbalance like it did on Friday.
Okay.
Um, because it's so close. The Nasdaq, I think, is a different story. I think the Nasdaq is going to be much more challenging because you've lost the leadership of Nvidia. I think that
Yeah.
story is pretty much you're talking about a story there that I don't know how they do it. I showed my accountant the numbers they were putting up and how they were sort of driving those, $2 billion beats, $4 billion guides every quarter. And his jaw just like kind of hit the table and looked at me and goes, "What's going on here?" And I'm like, I don't know.
Yeah. They're
And then you
cooking
have that whole
books.
SMCI thing
There's a
going on.
lot of books cooking going on out there, isn't there?
Well,
SCMI.
SMCI, and then of course Hindenburg had that report out there, and they named Nvidia something like 17 times in it. Um, so I don't really know what's going on in this space. I think I was thinking about this over the weekend because if you remember back in the day, maybe in the mid 2015, 16, 17s, you had all these companies, Skyworks, Corvo, NXP, the Apple suppliers, right?
Yeah.
And these things always traded at a discount because of the concentration risk that was there because of Apple. And and so now you have Nvidia, and Nvidia gets something like 50% of its revenue from what, four or five companies.
Yeah.
So is the market going to finally wake up to the fact that, you only got really a couple of guys buying these things and who really can afford it? And um, is there a concentration risk that now needs to be priced into this valuation? And I would argue at 20 to 25 times sales, right? You don't really have that at this point. On top of the
Yeah.
fact that you have a growth rate now that is going to start coming down rather materially.
Yeah. So we're putting in the second lower high in
The
NVIDIA
third,
here. Well, here's the first.
you missed the one before it.
This is the high, the
Yeah,
all-time high, right? So the
right.
second lower high
Oh,
right here,
oh,
and
okay,
it look
okay.
and it looks like if we take out, and it looks like that could happen today. The low from what was this Friday?
Yeah, it's like
Uh,
118 is the big level.
yeah,
Then you go down to like 109 at that gap.
yeah. And so is the market going to be able to rationalize that? I'm already seeing it. NVIDIA is its own gambling casino. It's not reflective of the market. That that what led the market up isn't going to affect the market. They'll still be able to generate something from maybe smaller caps uh,
I
to
don't see
generate a new
how.
high. You don't
I
see
don't see
how?
Nvidia accounts
Okay.
for 30% of the gains in the S&P 500.
Okay. All right. Well,
So
this is the whole market right here at this
basically, I
level,
mean,
right?
if you take Nvidia out of the equation, the S&P 500 is 6 or 7% lower.
Yeah. So there you go. There's the
So
market.
that is really the market, right? And
Yeah.
on top of that, what are the other names behind it? Apple, Nvidia, Microsoft, Amazon. I mean, I own a bunch of these names long term. Apple, Amazon, Microsoft, Alphabet. But
You own Meta?
no, I never liked Meta.
All right, well, look at this on the weekly, and there was actually a 2 week sell reversal last week, but this is right out of a textbook. And I'm not saying that we can't make another high, but I just want to show you this weekly. So we did make a marginal new high here, Michael,
Right.
last week, and then last week we closed under the prior 2 week close. But look at this.
Yeah.
That's not a good sign, and this could be a three driver up here, right? So this
Yeah,
has
I'm
been
trying to
one of
look.
the leaders, right? Facebook.
Yeah, that's what I was going to say. I mean, if you take Nvidia out of the equation and then you're left with, the other guys, and those guys are all benefiting because of Nvidia. They're just being pulled up, right? Uh,
Yeah,
So I mean, you take Nvidia out, you take Meta out. There is no gains this year, really. Um, Small caps, I mean, small caps to me are a casino too. I mean, what drove that first, move higher in small caps back in July was a good old fashioned gamma squeeze, right? You had rising implied volatility on the calls. Call volume was surging. As soon as the call volume disappeared, sellers came in, and that was the end of it, right? And the other thing too
right
is the
here.
IWM. If you can overlay a chart of the IWM with the Kospi, you'll see it's the same exact chart. And
Okay,
Kospi is not going up. It's kind of been heading lower again.
okay.
If you hit the
I
plus
don't, I
sign
don't.
next to the IWM,
Okay,
go
I'm
to the
getting a
no,
lesson from.
go to the right, go to the left rather.
Where?
Click X. Now go all the way up to the upper left hand corner. No, no, hit X. You want me to do
Oh,
it?
yeah. Go ahead. I'll
Okay.
stop sharing.
I'll take over. Oh, I can't. When can I?
So, what are you thinking and doing in here? I've heard
You see my
guys like
screen?
it's coming up. There it is. That's a Canadian.
If you
The
take the
ant.
Kospi, right,
Yeah,
and then you do a daily,
yeah.
and then you just put in the IWM.
Why would they be so correlated?
I don't know.
Okay.
You see it?
Yeah, yeah. Pretty
It
tight.
go, it go, it goes back. I mean, this goes back a long way, and so what you see here is that what does the Kospi been doing? The Kospi sort of leads the IWM. So here was your big rally. IWM didn't participate. IWM
Right,
like catches up all at once.
right.
Kospi crashes, IWM crashes, Kospi comes back. You could see they've been separating again. So I
Yeah.
would say that I use the Kospi as a leading indicator for small caps, and I
That is really a lesson. That's a pearl, when you find these
well, yeah,
correlations
it's
that's
sort of the
interesting.
same thing. You can do the same thing with the Nikkei, and I feel like the Dow or the Dow transports. I forget which one it is sometimes.
Okay. What are you advising people to do in this environment? And does anything what's the market telling you um to
See,
be
this is the
cautious?
this is the Nikkei and the Dow transports.
Pretty tight.
Pretty tight. Yeah, you can do the same thing, I think, with the Dow, if I remember correctly. It's not as
Yeah.
tight, but it's pretty close.
Yeah, Dow's reversed. So the ones that you were showing, like the Kospi and the Nikkei,
Yeah,
they took the big hits, and they're retracing um,
but not nearly as much as what
much
you've
as a
seen in,
Russell
yeah.
in the
And then,
Russell.
of course, you can take the S&P, right? This is one of my favorite charts to show people. So this is the S&P versus the Nikkei, right? But this is dollar yen. Now, if you take the S&P and you convert it into yen, it's practically the same chart.
Look at that. Yeah,
So, when you look at what's happening in some of these other markets, You're kind of like, can the S&P maybe make a new all-time? I mean, I'm not gonna, you're 0.5% away or whatever it is. Does it really matter?
Yeah.
But you know, when I look at where the market is right now, I was doing uh, a video for my subs over the weekend. I'm a member of the foundation of the Cycles Foundation. I don't know if you're
Oh,
familiar with them.
I know those guys. Yeah.
Yeah, so I'm a member there, and they give you access to all this great cycle work. And I just was spending my weekend building her cycles on on my
Yeah.
on my trading view. But I'll show you something that I showed my subscribers last week. This is the foundation for the study of cycles. This is
Who's
their
running that now? I know I've talked to those
uh,
a few of those guys.
Smith.
Okay.
Well, you have Lars, who's the big guy over there, Lars von Thien,
Okay.
and then you have Richard Smith, who's the chairman. But they
Yeah.
do like these videos on YouTube every week. Lars does one, and he does really good work. And then you also have every 6 months they have they do like a summit, and they'll have like Jake Bernstein, and they'll have Peter
Yeah.
Eliades, and they'll have Larry Williams, and they have all these great guys for free. Just go on and do their cycle work. And so when I look at this, let me just get up to the modern times, right? And we look at these cycles where we are right now in this market, right? And so this thing actually kind of has an AI feature, right? And it will, this is on the daily chart. And if we switch it over to the weekly, and it automatically tells you what the strongest cycles are, what the dominant cycles are in this. And it's telling you right now that the 181-week cycle is the most dominant cycle. Typically, you'll find that the long-term cycles are always about 180 weeks or even 180 days for that matter. And you can see that right here. It gives you this notification. And what it shows you right now is that this cycle is basically at a peaking point, right? Between now and call it sometime this fall, we could be in a point where the peak in the S&P 500 is sort of in for this cycle, right? And so it doesn't have to mean that you go straight down. It could be a case where like in,
Yeah.
21, it
You
could be a case like
consolidate.
you could be a case where like in 2018 you just really consolidated for a really long time.
Yeah.
Um, but you can see it's nailed some of these cycles pretty well in terms of peaks and troughs. And if you run that over with the longer cycle, the 400-week cycle, you can see this is coming into some sort of bottom here, but the bottom doesn't come really until almost late next year because this is a
Yeah.
long 300. So when I look at this, I'm kind of like, we're at a point where, we could see seeing this is a 149-week cycle also already rolling over. Um, when you look at the next more cycle, 125 already rolled over.
Yeah.
Here's
Okay.
another
More.
one here.
Yeah.
They're all kind of rolling over. And what's interesting is if you then take this and you do the Japanese yen equals, um,
So the yen bottom is coincident with the market top.
yeah, I'll
It
show
used to
you.
be a flight to quality currency.
And it,
Maybe,
it still is, I
yeah,
think.
yeah. So maybe you know, that's going to be behind the yen's descent. U.S. dollar yen's descent is going to be risk off.
So here's the
Oh,
yen.
yeah. Okay. So all these cycles are
And you
peaking
can see
or have
this.
peaked.
This is
Yeah.
showing you that we're in a down cycle, right? And
Yeah.
so this is kind of suggesting the yen continues to strengthen longer term. And
Yeah.
then if you look at the second strongest cycle, that's also telling you you're a major point of change here, right? So you have these two different cycles sort of telling you two different things. Um, and then I was working on this over the weekend if it works, if it pulls up. Um, 10-2, because we've been seeing the 10-2 curve steepen. And typically what you see at this point of the cycle is, notice this, right? So this blue line is the yen, the white line is the 10-2. So notice when the 10-2 usually steepens, yen usually strengthens, right?
Yeah.
It's happened 3 times in a row. Now we're at the point where again you're seeing the same sort of thing happening, where the yen strengthening, yield curve is steepening, and that's your flight to safety, flight to quality type of effect, I think.
Do you think that a weaker dollar, and I'm a dollar bear, we held par on the Dixie, but I think we're going to take it out after this bounce. It used to be when we had risk off, people would go to the dollar. Are things changing that if we have risk off, we could also still have a weak dollar?
I always think about it in terms of relative, right? Because it's possible that, let's say, it's possible, given the size of the carry trade, for example, that the dollar weakens versus the yen, for example, if the US goes into recession, because those interest rate spreads will really contract. Here's another thing that I like
Okay.
to do. So if you take the US 10 minus the Japanese 10, and then you overlay that with the Japanese yen, you'll see it's basically the same thing.
Okay.
So again, like you're at a really important inflection point here where if the spread between the US and Japanese 10 crosses 290 or so, the next big level of support from a technical standpoint probably comes around 236, which
Yeah.
means the yen's going to strengthen materially. And you can do that across multiple different currencies. This is the German euro. This is the German US 10 versus the German 10, and you can do that with the euro. It's inverse, but if you flip it,
Do you think the Fed is making a policy error, or they're too late, or they're too early?
it's interesting because if you look out at inflation swaps in terms of
Yeah.
how they're pricing things right now, they're telling you that inflation has all but vanished. And I don't really know for certain. This is the inflation swap curve. They see it being all the way below 2% by June of next year. Um,
Okay.
so I mean, we're not CPI is expected to be, in this low 2% range by March.
Okay.
Um, I mean, so that's
So,
certainly,
okay. So
I
people
mean,
construe that as bullish, but it maybe inflation is coming down because demand is starting to fall off.
because nominal growth is slowing. I mean, this is your 1 year inflation swap. That's also come down. And
Yeah.
here's your 5 year break even. Um, that's also that's also come down quite a bit. So, like what the market seems to be suggesting is that, no, inflation may not be an issue. And so when I look at these numbers, you can see we broke this key level of support in here around
Yeah.
210.
Yeah.
And so typically the way I'm thinking about it, right, is you have sort of this falling inflation expectations, falling inflation swap valuations. You have a steepening yield curve. You have a strengthening yen, weakening dollar. That to me really kind of points to this idea that the market is preparing for a slowdown in nominal growth. Um,
Okay.
and
I've
you have
heard.
a rising unemployment rate.
Okay. A lot of the sectors that led before the sell-off were consumer staples,
Yeah,
mainly defensive issues. People were buying gold and
right.
bonds, and mainly risk off. And then throw on top of that the SPLV, which is people trying to avoid
Oh, low
risk.
volatility. Yeah.
Yeah, and that people think this is a good sign because we're broadening out, but
Mm.
it's really the market being afraid of. There's some fear coming in. They're worried about uh, higher volatility. It's bearish. Do you think
I mean,
that
I,
so?
I I'm looking. I personally think there's going to be more volatility just because you're number one going into an election, and number two, we went through a period of very low volatility. And
Yeah.
typically, after you go through periods of low volatility, volatility then begins to expand again. I mean, it's just the nature of how volatility tends to work. Um, and so I'm not, I haven't been bullish, you know that, Dale, for a
Yeah,
long
I know.
time.
Yeah.
But, and that's obviously been the wrong
Yeah.
view, right? But again, I can look at the market and say, a lot of the reason why that hasn't worked has been because of this AI, led rally. But my view has also been one that you have to be very defensive in this market, meaning you have to, you can own high quality names like kind of like what I do, but I think you also need to have cash on the sidelines to kind of hedge yourself a little bit because we are susceptible to things like we just saw in the month of August. And I'd be curious to see what happens if the S&P doesn't go on to make a new high, if this is kind of it, right? Which I can make an argument that this was it, right? And we're going to see a turn lower from here. Um, then because I mean, if you just look at this chart, I mean, we filled the gap and that's it, right? And so technically, from my viewpoint, we really don't need to go any higher. Technically, there's this rising wedge pattern that formed really nicely off of this lower
Yeah.
levels.
And it's back inside the wedge. So
And it's back in.
maybe you just wait for it to close back outside the wedge for a signal
Right,
for a go,
right.
right?
And when you look at, and when you look at the NASDAQ, it's not really participating. Here we are. Here's a trend line. You broke it, came back
Yeah.
up, you came back around it, and now you're testing it again. Um, if you don't make a new all-time high here, and suddenly you have a lower high on the S&P, what do people start, wondering and thinking about in terms of that? And also just seasonally going into September, you have to remember a lot of liquidity gets drawn out of the market, because in September you have basically uh, treasury settlement, treasury tax dates, and that sucks a lot of liquidity out of the market. That basically
Okay.
causes
Interesting.
reserves to decline. And this is one chart I have. It shows you basically I take everyday SOFR volumes, and which is the money that's in the overnight funding market. And then I add in
Yeah.
reserve balances, and then you can see the price. The blue line is Bitcoin, and Bitcoin tracks this very well. The S&P tracks it fairly well also. Um, but again, we're going into a time of September where there's going to be a lot of liquidity sucked out of this market over between now and especially around the 17th or 18th of the month.
Okay. I tell
So
you what,
I would
Michael,
say that
really,
there's a very good chance in my eye that you don't make a new high
okay.
this month.
Gutsy call when most people think it's a given. That's probably why it probably works. Michael, best place for people to follow your work. First of all, um, follow Michael on X at Michael Mott CM. You got to follow this guy. He's a thinker.
Thank you.
I love the way he goes beneath the surface of the markets to give you correlations that I've never thought of. IWM and Korea, the Kospi. You can learn a lot from Michael if you read his stuff,
Thank
and
you.
that's how you become better. That's how you become better. So,
That's
Michael,
right. You always
how
got to
many years
learn.
have you how many years have you and I been talking here? Couple?
I think it's about our second year we're going on.
All
I
right.
think you
All
started
right.
following
Well,
me
I
in
want
like 22. You found me.
okay. I'm glad that our paths cross, and I'm
Yeah.
also I want to thank you for bringing in your excellent work and sharing it with our community and edifying them.
Anytime. So I have the Twitter account. I write for
Yeah.
Seeking Alpha under Mott Capital. I
Okay.
have a
Okay.
Substack called the Market Chronicles, and now I have a YouTube channel which has been really growing quite a bit. I try to put up a video a couple times a week there, under the Market Chronicles as well.
Okay. And you could tell that Mike's a really a guy that loves the beach because even when he's not there, he has it as a backdrop. Okay. So
Yeah, I'm sad the summer is over.
surfs up, Michael Kramer.
Yes, yes.
I'll see you out there. We could pearl on the and hit the ocean floor.
That sounds
Uh,
great.
really I really appreciate you being here today, Mike, after the holiday. Thank you very much.
No problem.
Michael
Anytime.
Mott, Michael Kramer, everyone. Follow him on X at Michael Mott CM, and you could join the team in about 13 minutes on the morning edge. Remember, don't just count your correlations, count your blessings, and see everyone tomorrow in this holiday week. Adios, Michael. Thank you, my trading warrior brother.
Okay, thank you.
Bye bye, buddy.
Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.